This here is the property analysis of the real estate investment planning, where we will evaluate if a property is good to buy as far as for your client. So first of all, what we're going to do is we're going to go ahead and click on here to go to a property analysis here. And you can see I've already got some other ones in here, but we're going to go ahead and do a new one here. So what you'll do is you'll just come over here and click on New Property Analysis, and it brings you up a fresh new screen, as you can see here. Now, before we begin, I'm going to kind of go over the screen a little bit to kind of familiarize yourself with this. This over here is all the reports that you can run. We'll get into that. Here you can upload a photo, all the information on the address, bedrooms, and baths. Over here are all your return projections, what your projection for appreciation, expenses, rental increases, vacancies, etc. And then we come down here, we're going to get into as far as the purchase price details. We're going to go ahead and fill this out. Then it'll show your monthly payment as far as principal and interest. It'll also give you a total investment summary. Once we have this completed, then we're going to move on over and fill out the monthly rental income and expenses. And this is where, to get a firm rental rate, you would go to your professional management company to make sure that you got a solid rental rate, not something you'd pick up off the internet, because you don't want to be quoting prices that are not correct, and then you're not going to look very good in your client's eyes because it rents for less than what you told them. So make sure you do that. We'll go ahead and fill all this out here, all right? And then down here it'll give you a monthly payment summary, which we'll get into. And once you've finished all of this and this here and click Save, then it's going to populate all these items in here, and it's going to show you on a monthly and annual basis exactly how this all comes together. And this is if you're going to buy and hold. Now also, if you're in a buy and flip situation, we were going to go through as far as how that would work as well. So in this analysis, you can see, is it better to buy and hold, or does it make sense to buy and flip? So with that said, we're going to go ahead and start putting in the address here. And the address as far as on this particular property is on 22318 York, and that's Road, and that's in Moreno Valley, California. And it was built in 2007. It's a 3-bedroom, 2-car garage with 3 baths. And it has, as far as the square feet, is 2,094 square feet. And then over here, you can just use your tab button, or you can use your mouse. It's a little bit easier to navigate with the tab button. You can move a lot quicker. And then you could put anything else in here that you wanted to put in here. I'm just going to put testing right now, just so you can kind of see that something does go in there. Then you're always probably going to want to associate a picture. So what you can do is, first of all, it's always a good idea to come over here and hit Save, because all this data is saved here. And then what we're going to do is we're going to go ahead and browse. And what we're going to do here is browse as far as on the desktop here, and we're going to go ahead and find the photo here as far as on this here. And it's going to be right here. As far as the property, we're going to hit Save, and it's going to upload the picture right here, as you can see. So it makes it nice and easy. The next thing we're going to do is we're going to come over here and put in what the appreciation rate is. Now, what these little question marks are is they pop up all over the screen. As you can see, there's many of them here. So it makes it very easy, so you don't have to go back and watch the video each time. But on the appreciation, it kind of gives you an idea of what it's been the last 30 years. But right now, for this example, we're just going to put in a 5% appreciation rate. Expenses, that will keep climbing as years go on. As far as maintenance expenses, we're going to put 3%. As far as vacancy, we're also going to put in 3% there. You can put whatever your area is. As far as rental increases, we're going to set that at 4%. And as far as this client is in the 40% bracket between federal and state. Some places may not have state taxes. If that's the case, then you'll just use the federal. So you're going to put 40 in there, and we're going to hit Save. Now all this data is set up, so now what we're ready to do is come over here and actually put in as far as the purchase price. Now what we're trying to buy this property for is $205,000. Again, it's easier to use your tab key, and you can go ahead and navigate very, very easily here. If you're going to put 25% down, it automatically calcs it, which is $51,000, which was the case. This here is a 30-year loan. Okay, the interest rate was 4.6, and what you have to enter the interest rate, you can just hit save, and it will automatically figure what the loan amount is going to be. You don't have to figure that. Now on the closing costs, we can go ahead and put on closing costs. We figure $2,500 here. If you have some points that are going to be paid, in this case there was 1 point because they wanted to buy down the rate a little bit. And sometimes you may have prepays, so we're just going to put in $1,000 of prepays. And if you don't know what those are, you can just come over here, click on this little button, and it'll outline what it is. Okay, and then this is what we call make ready. This is the rehab of the property to go ahead and get it ready for rent. So in this case here, we're just going to put $1,000 because there was really nothing much to go ahead and do with this particular property. We hit save, and now what we have down here, it automatically shows us what our principal and interest payment is. It shows us what our down is, etc., and our total initial investment, which is a little around $57,000. Okay, now that we have this filled in, what we want to do over here is come in and put in the rental rate. So the rental income on this is projected at $1,550. Okay, parking and vending, this goes more for if you would have maybe a small apartment building or something, or a large apartment building. And then the property taxes over here, what we've got here is we've got $335 is what the taxes are as far as on this here. Again, I can use the tab key and just move it on down, $50 a month for insurance. This is all on a monthly basis. The association fee on this is $135. Okay. As far as the management fee, you should normally always figure about 10% if you're going to get good service. If it has a pool or lawn service, you can add that in as well. As far as utilities, we don't have any on this because the resident tenant is paying the utilities. The maintenance, over here it kind of gives you an idea, but on this property here, we're going to figure about 8% of the rent it's going to have to go ahead and take care of general maintenance and also rehab maintenance, because you got to project what it's going to be as far as down the road. It did not have any PMI or MMI advertising and leasing fees here. There was no cost there as far as on that end of it, because that was built into the management fee. And so what we do is we hit save over here, and now what we find is the total expenses are $799, and down here it gives you a summary. Principal and interest, other monthly, so your total outgo is $1,587 a month. But as we've been doing all this, you probably have noticed all this was filling in. So this shows you monthly and annually. So let's walk this down here. Basically, your rental income of $1,550, less a vacancy, so you got operating income of $1,503, less the $799, which is your expenses that came from here, and your mortgage payment, which came from here. You end up with a month-to-month, you're a little bit negative as far as $83 a month, month-to-month. However, that's before any tax savings or depreciation. And this is what we see as being liquid. And what we mean by that is you can actually go ahead, if you're taking, let's say, 3 elections on your paycheck, you could maybe go down, and this is your CPA would have to advise you. We're not certified public accountants. And let's say they said, well, if you take 9 elections because you now have this rental property, you could actually get $230 a month back on tax savings and about $186 a month on a depreciation. Because right now, you can't write the property off if you're living in it, but if it's a rental property, you can. So when you take the negative here and add this back, you're actually positive $332 a month, or about $3,900 for the year. So what you're actually doing is you're using IRS to help fund your investment. Now the next thing of it is to look at a true return is you have principal reduction, because part of this payment of this $788 is principal. So what happens is $212 a month, what you're doing is you're reducing the principal, which is like a forced savings account. In addition to that, the property is appreciating, and we put up here the appreciation rate up here was 5%, so that equates to about $854 a month or $10,000 for the year. So if we look at the total after-tax benefits and equity buildup, it's about $1,399 a month or about $16,000 a year. And if we take this $16,000 and we divide it by the total initial investment of $57,000, your overall projected return here is showing somewhere around 33–34% when you factor in all these items here. So most people have a tendency to focus just on this, when in reality you have all these other things working for you, so you can see it's a very viable investment. The cash on cash return, it projects, this is a little negative, this because of this here. okay, and the capitalization rate or return of equity. And if you're not familiar with what those terms are, you can go in here and it'll break it down as far as and let you know what those are. Now, so this will enable us to see, does this make sense for a buy and hold? In this case, it does, because it's extremely positive after the tax savings and depreciation is back. Now, let's say we're going to see here as far as on a buy and flip. So let's say we could go ahead and flip this property for $300,000. Okay, we'll just give you an example. And let's say our closing costs, now that we've bought the property, but this is on the resale closing cost, let's say it's another $2,500. And let's say it took us 3 months to buy the property, fix it up, and get it sold and closed. And let's say we had a carrying cost of $7,500. And then, of course, we want to go ahead and we want to be paid a commission, so we put 6%. What we do is we just hit save, and you're going to see this populate here now. Okay? So now it's showing that if we sold it for $300, we bought it for $205, we had purchase closing costs, because we have to take these costs here. All these costs have to be included in this buy and flip, points, prepays, and all this. And then this here is on the carrying cost when we had it, and the resale closing costs and the resale commission. So out of this $300,000, after you take everything away, you're going to have a net profit of $60,962 on an initial investment of $239,000. You're making about a 25% return. However, it could be greater than that, because as we note here, if you could do this 3 times in a year, your return isn't 25%, it would be 75% on this money that you're using to go ahead and do buy and flips. This concludes the property analysis. As far as how you can actually print this reports out. Okay, if you want to go ahead and just take this and print it on the screen, you can do that very easily just by going up here and hitting your print. If you actually want to do like a print preview, and it'll do it very, very nicely there for you. That's not a problem. But if you want a more professional report, you can come in here and click these boxes, or you can just, if you want individual ones, or better yet, you can just click all reports. Okay, and we also want to send it to the print card. So we're going to go over here now and hit print the preview here. And what you're going to see is you're going to see it come up. And now I'm going to reduce this down a little bit so you can see the whole page, and I'm going to increase it a little bit here. And so now this is a complete analysis as far as of the property that you can go ahead and send out or give to your client in person. This here is a 5, 10, 15, 20, 25, and 30-year analysis. It has your name and everything down here. It would have your logos and everything there as well. Okay, this here shows as far as the cash flow. You can see it's a little negative on the first couple of years, and then you can see how it goes positive. Okay, and then the last thing shows as far as your debt reduction here. Okay, and so this here can be totally printed out as far as for your client. Now also, I just indicated that we sent it to the print card. So we go over here to the print card. What it is, it's setting over here, right here in the print card itself. So we can actually go ahead if we wanted to view this, and then we can see a complete itemization as far as how all this would work. Now, this in your print card, you can come in and you can customize a letter here if you want as far as to your client. You can actually add a cover page, and then down here it has the property analysis. So if I want to go ahead and see what this is going to look like, what I can do is I can go ahead and print this up here. I'm going to reduce it down here so you can see, and this is what the package would look like that you can either email or go over in person with your client. You can see it would have your name down here to have your logo, and then this is the cover letter, okay? And then here is the analysis. And this is the simple, the first year analysis. This is anywhere from 5 to 30-year analysis. This shows the cash flow, and this shows as far as the reduction as far as on the loan itself. So this concludes now the property analysis, and also as far as the printout and the package that you would actually send as far as to your client to go ahead and offer them the property for sale.